You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson from WallStreetWindow.com. Welcome to the show, Mike.
Oh, thanks for having me. It's great to talk with you.
What is catching your eye on the markets today?
Well, it's interesting today. I penned a little note this afternoon because, at first glance, it would seem as if not much is really happening, or has been happening, really, for the past week. It's almost like there's a baseball game I was watching on the television box the other week where the Toronto was playing the Texas team, and if you watch one of these games, in between innings, it looks as if things happening, and then the seventh inning came, and all hell broke loose, and a bunch of errors made by the Texas team, and they lost, and it was exciting. But if you were just watching the few minutes before that inning started, between innings, there's no one on the field, you would have fallen asleep if you thought that's all that was happening. And that's what I think is actually going on to people now when it comes to the stock market. It appears that not much is really happening. I mean, the Dow was down just a little bit today, but we've had a tremendous bounce for the past couple weeks. And before that bounce happened, of course, there's the big drop in August. There's that morning in which the Dow got down 1,000 points. Look, back in May, the Dow was at 18,250, and in August, it has gotten down to 15,500, almost a 3,000 point drop in the space of a couple months. And on your show, we were talking about problems with the stock market. The internals of the stock market were disintegrating, meaning that fewer and fewer stocks were going up. And that's always a sign that you're coming towards the end of a bull market. And in July, when the NASDAQ topped out, there was only about 24 NASDAQ 100 stocks that were helping everything out. Stuff like Apple, Amazon, Google, Netflix, Facebook, and a bunch of biotech stocks. They were all going up, but most of the rest of the stock market was doing nothing. That was a big warning sign. And then, of course, we had the big drop, and the Dow down 1,000 points one morning, Monday morning on the open. And since then, the market went sideways in September in a range, pretty wide range. The Dow bounced up to 16,750 about. But now, so these are some of the biggest, wildest moves seen in years. In fact, there's only been about 10 other times in which the stock market fell as much by percentage terms in a 4-day period as it did on that August slide. Now, what's happened, though, is this month, the Dow went from 16,000 up to 17,000 in the space of about a week, and now it's just really floating around. So people are falling asleep again because, you've seen these wild moves up and down, but now the market's gone back up and nothing seems to really be happening. It's a big difference from the Dow being down 10 points to being down 1,000 points. So everybody's just most people are just falling asleep in the United States that are invested in the stock market, just as they were when we were warning people back in May and June and July. And then they woke up one morning in August and saw that all hell broke loose. The point is that I think or believe we're in a real bear market. And the reason I believe that is because I define a bear market in a simple way that's clear and anyone can see. Most people don't really operate with clear definitions of what they're doing when it comes to analyzing the market or their investments. They frankly just say, well, I'm up, so everything's great. And then when they lose 20% or something, they freak out, and now they say, oh, we're in a bear market. And by the time that happens, it's, you lose a lot of money. Well, I use a very simple and clear definition, which actually can help us find out what to buy. I'll get to that in a minute. But the definition is when the market falls below the 200-day moving average, which is a long-term indicator, on all stock charts people use, and those moving averages start to curl down and act as resistance, then you're in a bear market. And what happens in bear market is you do get counter trend rallies up to those levels, up to the 200-day moving average, then you see the rallies fade, then you end up having another big leg down. So in my book, what we're seeing is a counter trend rally. The first bear market rally up to those moving averages, which on the Dow it's at 17,576, basically 400 points away if it gets there. It doesn't necessarily have to get there. But the important thing people know is that's a key resistance level, and we're close to it. And there's no guarantee we'll even get to that. So, once again, just as we were telling people in May, June, and July, it's time to get out. It's time to reduce your holdings in the stock market and move that into something, I think, either in cash if you just want to be safe, or something that has the potential to go up and not lose you money, which I'll explain in a few minutes. I think that's gold. But this is where we are, and everyone's, it doesn't seem to most people anything's been happening this week or today, and that's why I was laughing when you asked me what I think is happening today. Not much, but it's a preload, though, where the market can float around like this for a week or two, or even a month, even 6 weeks. I can't really predict how long. It can just float here, though, and then all of a sudden the Dow starts to fall and everything starts falling again like it did in August and September. So that's basically where we're at.
Mike, I remember watching the newscasts on that day, August 24th. We're shocked. The markets are down. How did this happen? Nobody predicted. And I turned to my wife and I said, Mike Swanson did? Weren't they listening to us?
Yeah, I just admit, I had no idea it was going to fall in the morning like that, but that's an important lesson. I believed it was going to fall, and like you said, we were talking about it, but I had no idea it would fall in 4 days, and that's an important thing for people to know, is nobody can really try to predict the short-term action of the stock market. It's really impossible to do that on a consistent basis. And the way our minds work is whenever we see, the market trade, we turn on the television set or we see it up or down or whatever, and if it's up a lot or down a lot, we want to try to figure out what does that mean, and then start projecting out short-term scenarios. We'll go up 5 days or down 5 days or do whatever. And the funny thing is, in a day like today, in the past couple of days where it doesn't do a whole lot, then people aren't worried. They're not trying to figure it out. They're like, oh, nothing happened. But it's when you see the big days that your mind kicks in and you try to find a pattern and that will predict these things. But in reality, even though that's very difficult to do, really impossible, you can easily see what the big trend is of the market. And if you accept that big trend and then align your actions with it, then you can do fine. And you don't need to try to figure all this out. We go, what's going to happen tomorrow, or the impossible. And the big trend's down because we're below those moving averages. Now in the summer, the moving averages start to flatten out, and there are other signs. Internal deterioration was a good warning sign. But so here we are. If the market's under the moving averages and fell below them as much as it did, that means there's now resistance. And when you start a bear market, you historically see the market fall 35%, and that's the average. So it can fall more than that, and it can fall really quickly, or it can take years. The 2000 to 2002 bear market took 2 years. We saw gold go in a bear market from 2011. Really, the last year is when it started to bottom out in base. So you're talking several years there. And frankly, when we were talking in the summer, I thought this could be a really fast bear market that could last 6 months or 10 months and just basically go down very quickly. But at this point, it doesn't look like that's really in the cards, because this rally has brought the market back up, and here we are. The rally takes a couple weeks. The top for the rally takes a couple weeks, and it just, to me, makes it look as if this could be actually a slow bear market that has declines, and then you get rallies like this, and this could just go on for a very long time. And that's not really what I want to see, but that's could be what ends up happening.
Mike, the television newscasts every night tell us the Dow was up, the price of oil was down, but are they really doing a disservice to us? Because they never give us the context behind those numbers. Like, what does it mean if it was down today if you don't tell me what it was yesterday?
Yeah, that's exactly right. And the context has to be what is the overall real trend here of the market, and and then look for signs that overall trend is changing. That's really the secret to long-term success and in this game, the stock market game. But the thing is, I mean, they're the news, and it's their job to report what's happening right now, and everyone wants to know, and that's the need they fill. But it doesn't really help people out that much. And just saying, if I was had a TV show and every day I just said, well, it's a bear market, what are these moving averages, and you just start selling, that's good talking with you on this radio show. But if I was doing this radio show with you every single day, people get tired of hearing that. It's oh, he's telling me that again. He's telling me that again. Well, yeah, because that's the most important thing to know. So you can record what we're saying here and play it again tomorrow, and the day after, the day after, the day after, at least for a couple weeks, and it'd be everything they need to know. But but that's not new. That it would become an old message.
Well, I mean, I know some of these television anchors, and the blank look on their face when they report these numbers tells me they don't know what the hell that means. What does that Dow number mean? They probably don't even know what a Dow is.
Yeah, well, actually, I mean, it's a good point in a way, because there's actually a lot. That's actually a good example. We see the Dow's 30 stocks, and I was talking about to you earlier. It's gone to this level and this level and up and down and this and that, and today it's down like 48 points. And the thing is, that in itself doesn't tell you a whole lot. But what's more useful is to look at the 30 stocks in the Dow, and then the 500 stocks, the S&P 500 and the 100 and the NASDAQ, and see what they're all really doing. And that tells you what's really going on. And most people just look at these averages, and they try to figure that, come to conclusions, and it's not enough information. If you actually look at what's happening inside the stock market, then what's really happening. So, the big question people have is this really a bear market rally, or, just a correction and a rally that's going to go new highs and on and on and on. And you can't really answer that question just looking at the Dow. But if you look at the stocks, and I do that at least once a week, I'll go through a couple thousand of them, then you see what's happening. And what's happening is that most stocks are still not doing very well. In fact, many stocks, even with the market rallying, are on their lows of last month, and some of them are even going through it, some of them barely going up. So, for example, in July, there's a couple dozen, about 2 or 3 dozen stocks that were going up like crazy when the market topped out, that were leading everything. Now, there's only like 5 stocks like that. One of them is Nike, Amazon, and Google. I mean, those are like the 3 most important ones. And many of the ones that were doing so great in July, they're not doing that well right now. Most of the biotech stocks aren't going up at all. Netflix had a bad earnings report. Walmart's crashed, would you call it that? It had terrible earnings. IBM was down a lot too. And across the board throughout the stock market, there's lots of weakness and so forth. And that's normally not what you see if you just have a simple correction. What tends to happen when you have a bull market and a correction is there'll be something that holds up. And then when the correction's over, it goes up and leads on the next rally. So last year in October, biotech stocks did that. They didn't drop much, and then they came really hot and led the final couple months of the bull market. And now there's nothing that's really done that. And again, that's a sign that this is a bear market rally and should be treated accordingly. Now, you want to look at bullish stuff, that you want to look for stuff that's actually already been in a bear market and is based out and is right around its 200-day moving average. Because just as the 200-day moving average is an indicator that tells you things are bearish when a market gets below it, when a market's in a bull market, it trades above that moving average. And gold and silver and commodities are now floating around that moving average. Gold basically rallied up to it around the 1175 area and is dipping a little bit below it. If gold holds here and breaks through that in the next couple of weeks, then that'll finally mark a transition for gold into a new bull market. That's really, this transition phase really has been going on since July. The gold and the mining stocks made a big bottom in July and been floating around, and they've rallied quite a bit off the low of July. I think the mining stocks are up almost 30% or went up almost 30%. So they're pausing, and if they break out again, it's a really critical long-term resistance level that we're going through, just as the stock market broke down in August. Gold and mining stocks are getting in a position to break out. We just got to see if they're going to do it.
We'll have more with Mike Swanson right after the break.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Mike Swanson. Mike, you're saying gold and gold stocks will be the next opportunity. Do you still have to be very careful right now on what you pick?
Yeah, in a certain sense. Typically what happens when gold goes into a bull market with the mining stocks, what you see happen is the large cap mining stocks, such as Newmont Mining and Barrick and the large producers, they tend to go up first, and then more speculative, smaller companies that produce go up next and start to do really well. And then you have the really speculative exploration companies that have no earnings, and they're basically micro-cap stocks, 100 million or less market caps. But, it's not, the situation isn't like it has been over the past couple of years where, if you bought one of these things, you could see them crash. They would downgrade their earnings, and is this a horrible bear market? Now, I think money can be put into them, and, I wouldn't put everything you own in them, but put enough where you're comfortable, you can stomach a drop to the lows or something of last month, but enough money where if it goes up, you'd be very happy. So that's what I think that's what I'm doing myself, and I think that's what people ought to do. And I don't think people should be scared of them. But that's what happens, though, after a bear market, that has been as long as the one was for gold for several years. The people are scared of them. It's kind of the opposite. The stock market, the market has a drop, and people are convinced it's a correction, and they just fall asleep and have no worries. And with gold, it goes up and rallies, and almost no one can believe it's real. It's like the opposite of psychology. But that'll change in time. If gold does go up to these moving averages, and I think it will, probably next month, at least before the year's over, eventually people will stop being scared of it and start, the average person will see it go up and start to get in. But it just takes time for people to either get their confidence back or see something go up long enough that they're ready to start to hop on it and participate.
Mike, thanks a lot for chatting with us.
Thank you. It's great talking with you as always.
And we'll chat with you in 2 weeks.
Okay.
My guest has been Mike Swanson from WallStreetWindow.com. You can contact Mike by email by punching in wallstreetwindow@gmail.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our very popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.